Nope, you don't need the money supply to increase. Nope, deflation is not bad. If the prices go down, that's a good thing. Bitcoiners have been suffering from deflation for the past 15 years, and it has been absolutely glorious. And there's nothing better than it. Everything just keeps getting cheaper in Bitcoin. I mean, people complain about food prices going up. They're not going up if you're holding Bitcoin. House prices are not going up if you're holding Bitcoin. And the alternative to holding Bitcoin continues to be to play the fiat circus, and that's just a losing game.
Oi, come back!
What's going on, guys? K-Dub here with another episode of Crypto Zombie. Welcome back to the channel. Hope you're having a great day today. Now, in today's video, I have something really awesome that I want to share with you guys. This is a little bit of a different kind of special video, but you're going to want to watch this one to the end, because when you understand what could potentially be happening for Bitcoin, and this could happen in 250 days or even less, we're going to enter into something that I'm going to refer to as Bitcoin chaos mode. Now, what is all this about? Well, simply put, we know that the 4-year cycle is not quite playing out the way that it usually does. Generally speaking, Bitcoin is not this high before the halving, right? We're only about 25% away from the all-time high. We also know that Bitcoin generally never gets above the 0.618 Fibonacci, right? Without a massive retracement. Well, we had a mini retracement, but we're still holding above that today. Now, is this because of the ETF demands? Well, that is something that we also have to touch on today as well. And, you know, a lot of people say that it's the diminishing return theory, right? So obviously, based on diminishing returns, Bitcoin should really only hit between around $70,000 to $90,000 this cycle, right? But could things be about to change? So we're going to talk about that. I want to dive in super quick and look at the lower time frame, but I don't want to focus on too many of these shorter charts today. As you guys can see, we did break out of this ascending parallel channel, and currently right now what we're doing is we're retesting the top of this as support. So if we do continue to hold and have that breakout, then the next level would be around $55,000 to $57,000. Of course, if we have the breakdown, then I'm really just thinking some kind of a retest right here on the heart line, which, you know, would bring Bitcoin maybe back down to about $47,000 to $48,000, right? But another thing to note is that risk on is still clearly happening, specifically in the S&P, which looks like, I mean, depending on what happens, you know, in the next couple of hours, this candle is most likely going to close out of this range, which means that we would have a weekly candle breaking out of this upwards trend, which could signal the appetite for risk on, right? Bitcoin is still in this parabolic advance, and the interesting thing, like I said, is generally speaking, you can see we did have that breakdown from the 0.618, but this was a very, very quick move that got bought right back up, and currently we're sitting above it right now. Now, if you remember, if we actually look at what we did last cycle, and we take this down here, we obviously had Bitcoin coming all the way up to about the 3.618, right? And that basically called the top right there. Now, I don't want to get crazy with the numbers right now, but, you know, just out of curiosity, if we were to match simply what we did last time, well, the 0.3618 would put Bitcoin at around $210,000 this cycle. Now, that seems a little bit contradictory compared to the 70,000 to 90,000 conservative view if we were to follow the diminishing trends, right? But this is where it's going to get really, really, really interesting, guys, because as you see, Bitcoin is entering into these overbought areas, and that doesn't necessarily mean that a massive correction is due. Yes, we've obviously had multiple 30 to 40% corrections, you know, during a lot of these rallies, but you could see the last time that we've done this, you know, for example, back here in 2016, 2017, Bitcoin had a 3,647% rally. Right here, 2019, 70%, then we had that pullback, 405% in 2021. So the big question is, you know, what is happening next? By the way, shout out to Jelly. This was over on Twitter. If you guys aren't following me over there, you definitely are probably missing out. But what I want to talk about is that we're hearing these sort of, you know, bigger claims about these bigger numbers again. I mean, Tom Lee, you know, he's got his calls.
I said 75. What did you say to me?
I think it's, you know, could be as high as 150,000 this year.
So double what I thought was.
Yeah.
150,000, so we're tripling at this point.
Yeah, because you've got demand improving with the ETF, and you have the supply shrinking with the halvening. And if monetary policy eases, which we expect, you know, that's supportive of risk assets. And Bitcoin's holding up. I mean, that's another reason why I don't think a drawdown is going to start that soon. I mean, Bitcoin's been rallying the last couple weeks.
So is that a possibility? Well, I mean, we're not even close, on here. For example, we talked about these pi cycle indicators, and we also said that if we looked at basically the level of interest and volume, if you watch my previous video, that buying Bitcoin at these levels, if you do believe in the cycle theory, is the equivalent of buying Bitcoin for around between $10,000 and $18,000 back in 2020, right? Before it went on a 400 to 500% move, depending on, where you got in. So this is what we're going to talk about, and I hope you stick around. And guys, also don't forget that Meta Signals is they got 159 spots remaining until they close up. You can join the Discord absolutely free. And I've been hearing a lot of people having a lot of success. There's been a lot of really good reviews on this, so check it out if you guys are interested. But obviously, price does increase as time goes by. So before we get into it, did you guys happen to catch the Donald Trump Bitcoin question?
China obviously has its own push in the Chinese digital currency. But isn't the next logical step for you to embrace Bitcoin? Because Bitcoin obviously is decentralized. The government can't get its hands on it. What about Bitcoin with all the young people, including African Americans, who are very interested in it?
Well, a lot of people are doing it. I always liked one currency. I call it a currency. I like the dollar. But a lot of people are doing it. And frankly, it's taken a life of its own. You probably have to do some regulation, as you know. But many people are embracing it. And more I'm seeing people wanting to pay Bitcoin. And you're seeing something that's interesting. So I can live with it one way or the other. I've always liked one really powerful thing, and that's called the dollar.
Yeah. I mean, I feel like he kind of can't say that he loves Bitcoin. He kind of has to say that he loves the dollar, but didn't sound like he had any issues with it. Didn't sound like he wanted to ban it or get rid of it. He was like, yeah, it's here to stay probably, and we should regulate it, right? So here is where we're going to get into the main part of the video. This is what I'm seeing. Now look at this that came out from Sentiment data, okay? If you look at the different wallets, what you're seeing is wallets that have less than 1 Bitcoin in it actually saw about a 1% decline. Wallets that have between 1 and 1,000 Bitcoin in it basically stayed level. But here's where it gets interesting. Wallets that hold over 1,000 Bitcoin, which is, obviously giant whales, institutions, we don't know who these guys are, has jumped 7.5% in 30 days. So while retail is getting bored or they're panicking or maybe they're moving into altcoins, which, obviously I do believe that the altcoins are going to start having a bit of a move. At the same time, the big whales, the big money has been loading up on Bitcoin. And if we come over here and have a look at what Mike Novogratz was talking about, he actually has direct access to these institutions. And this is what he said is really happening.
Listen, we've come a long way fast, both in U.S. stocks and in crypto. I mean, crypto, it's almost felt too easy, right? We've gone up almost every day. And so it wouldn't surprise me if there's some consolidation, right? Trees don't grow to the sky. But I think the big story is we've now opened up the institutional, the RIA community, right? $45 trillion of wealth are managed by brokers. And, we've got baby boomers who own most of the wealth in America, and they're getting their first easy access to Bitcoin. And you're seeing it through these ETFs, the massive growth in a very short period of time in this whole ETF complex. And I don't think that's going to stop, right? Last night, we had $135 million of inflows after that slowed down from 400, 350. Paul Tudor Jones taught me early on in my career that prices get set on the margin, right? And so when we've got more buyers and sellers, prices go up. And I see a kind of a constant, these are hodlers as well, right? Mm. These are guys that are buying to put it in their portfolio and hold. They're not traders. And so the ETF buyers in general that are coming through these RIA channels, I think are taking supply off the market. So I still see Bitcoin ending the year a lot higher. That said, could we consolidate around here for a little while? Of course we could, right? There are big channels that still aren't turned on, that we know they're going to get turned on, right? We're in conversations with them. These are the big platforms. And there's an inevitability to it. Why? Because their customers are calling and bitching at them and saying, we want to buy Bitcoin with you. And so then the sales guys who get paid for selling stuff are screaming at their bosses. And so I'm certain it's going to happen.
So here's an insane chart that came out from the Bitcoin Times. So in the last 28 days of trading for the ETF, we had 167,000 outflows from Grayscale, right? But if you ignore this right here, because keep in mind, this is Bitcoin that was already in circulation, we can clearly see that the demand for Bitcoin is outpacing this GBTC outflow, right? Not to mention the fact that right here, we have about 25,200 in Bitcoin that were mined in the exact same time. So that's 272,000 Bitcoin in 28 days, okay? In 28 days. Now, look at this over here. This is the Bitcoin on exchange, which continuously keeps falling lower and lower and lower. In fact, about today, we have only roughly about 12% of all of the Bitcoin on exchanges. The rest of the Bitcoin is basically in wallets of holders and people that are not looking to sell. So if you just kind of round Bitcoin, let's just say that there's about 20 million Bitcoin. I know it's like 19 million, something like that, but I don't feel like doing that kind of I don't want to do that kind of math today. So let's just say there's 20,000. This is the benefit of the doubt, 20 million, excuse me. So if we take that number and we come on back over here, let's just do some super quick math, okay? So 272,000 Bitcoin. So let's just do, there's 2 million on exchanges, okay? And obviously you divide that by 272,000. I know this is a little bit of weird math, but just stick with me how I'm doing it. So that's 7.35. So that's also how many of these are going to be mined, right? So 7.35 times 25,200, right, equals 185 whatever and change, plus the 2 million that we have on the exchanges right now. So that is all the Bitcoin that should be available or, mined in that time, give or take. Obviously, there's going to be some fluctuations. Now, if we divide that by 272,000, right, which is the average of what we had in 28 days, that puts us right here, guys, at literally 8, okay? 8, which means that if this does continue to happen at the rate that it's happening right now, if the demand stays the same, obviously we can only make so much Bitcoin, right? And the amount of supply on exchanges stays the same, then that means that in 8 months from now, there would literally not be enough Bitcoin to meet the demand. There wouldn't even be any Bitcoin left. Now, I know that sounds insane. That sounds absolutely wild. Is it really going to get that intense? But the question is, leading up and even getting close to that point, can you even imagine the supply shock that Bitcoin would experience in that time period? So these are where some of these numbers get really, really crazy. And if you want to just ignore the fact that we have the institutions, right? And keep in mind, all of these previous rallies were driven by retail and, just basic speculators, maybe some high net worth individuals, but definitely not family offices, definitely not pension funds. We didn't have any of these ETFs, right? So as CTO Larson pointed out, and if you guys aren't following him, excellent content over here. He basically breaks down one of the most interesting models, mathematically done, that I've seen, comparing all of these previous parabolas, pre-halving and post-halving, and what he was able to come up with was absolutely mind-blowing. And before you even watch this clip, I want you to remember that this is just based on numbers. It's not even considering the supply shock and demand and chaos mode that I just showed you.
We will now analyze what happened before the halving and what happened after the halving. Then we will switch to this chart. The first parabola didn't have any halving, so here we don't have any data. But the second parabola did, and the gain was 6x before the halving over 376 bars, 6x over 376 bars, and after the halving it was 96x over 367 bars, 367 days. And now you already saw something interesting. The part of the parabola that was before the halving and the part that was after the halving was almost exactly the same number of days. The second part you see is that the pump after the halving was bigger than the pump before the halving. Now, let's see what happened with the other halvings. Let's move to the second halving, which happened in parabola number 3. Price appreciation before the halving was plus 300%, meaning 4x over 542 days, 542. Post-halving gain was 29x over 526 days, 526. Interesting! The pump before the halving and the pump after the halving was almost exactly the same length. And again, the gains after the halving was bigger than the gains before the halving. Let's move to the third halving in parabola number 4. Gains 2.7x before the halving over 513 days, 513. Gains after the halving until end 2021 was 700% or 8x over 548 days. Again, the number of days before the halving and the number of days after the halving, where the parabola was intact, where we had an ongoing pump, was exactly the same before the halving and after the halving. And again, the gain after the halving was significantly bigger than before the halving. Okay, let's move to parabola number 5 and the fourth halving that will come soon. The estimated days vary a little bit between services, April 20, some say April 22, doesn't matter exactly, but it will be somewhere around the 20th of April 2024. And that is very soon. We are in this parabola today. Of course, we don't know exactly what slope it should have, but if it is something like this, and of course we can modify it as we get closer. From the bottom to the halving is 3.5x over 516 days. 516. And now you see something similar. The duration this time from the bottom until the halving is practically exactly the same as in the previous two parabolas. And the gain before the halving was very similar to the previous two. In fact, it's probably exactly the average of these two. Now let's add one column here, and that is gain post divided by gain pre. So how much more after the halving did price gain compared to before the halving? So the first time it was 16 times more, second time 29 divided by 4, it was 7 times more. Next time it was 8 divided by 2.7, it was 3 times more. So as you can see here, the extremeness of the difference has dropped by about a factor 2 each time. So let's assume that it drops again by a factor 2, that we get 1.5 times the pre-halving after the halving. So 3.5x times 1.5 times 5.25x. Days, what should the day be? This is like one of those IQ tests where you should answer what's in the box. Since these have been so similar every single time, I think we just assume that the length will be the same. So 516 days. So according to this model, after the halving, we could get a 5.25x pump over another 516 days. So where do we end up then? So what was it now? 5.25 times. That is 425%. 425% over 516 days. 425% over 516 days. That would take us to 300k September 18, 2025. $300,000 in September 2025. And then an 80% correction, which would take price back to 60,000, which would make a lot of sense since that's approximately the current all-time high resistance level.
So this is what a lot of people are just simply not understanding. You know, I'm a TA guy, I do TA. I'm not going to do any TA today actually, because I really want to just focus on, you know, the idea of this supply crunch and the idea of what is really coming for Bitcoin. I mean, look at how far Bitcoin has been able to come in the past 15 years without the help of the institutions, without the help of the ETFs or any of these other products. And now imagine that they're here and look at the rate at which they're accumulating. And I have to end on this note because it's very important. You know, I don't want to go super down the libertarian path, but also it's not just the fact that they have the exposure now. And of course, it's a great performing asset. And yes, it's a great store of value. It's also the fact that if you look at what the government does, right? And I'm not saying, you know, what to do with taxes, obviously pay your taxes, all that other stuff. But like Nayib Bukele was pointing out, right? He is the president of El Salvador. He was discussing taxes and he was discussing Fed policy. And this is also another major reason why I believe that the world is going to wake up to Bitcoin and more people are going to continue to allocate larger portions of their portfolio.
For instance, the financial situation of the United States. When I talk to my conservative friends right here, they always tell me that the problem is high taxes, but they're wrong. Of course, high taxes are extremely high here in the United States. I give you that. You're right in that. But that's not the real problem. The real problem is not the high taxes themselves, but the fact that they are not even really funding the government. Not even those high taxes. higher than a lot of places in the world, but even those taxes are really funding the government. So who's financing the government? Government is financed by treasury bonds, paper. And who buys the treasury bonds? Mostly the Fed. And how does the Fed buy them? By printing money. But what backing does the Fed have for that money being printed? The treasury bonds themselves. So basically, you finance the government by printing money out of thin air. Someone could ask, well, so if the government can print the limited amounts of money out of thin air, why do they collect taxes? I mean, in theory, it would make sense, right? If they can print unlimited amounts of money, why would they need taxes for? The answer is simple, but it's very shocking. The real problem is that you pay high taxes only to uphold the illusion that you are funding the government, which you are not. It's shocking, but it's true. The government is funded by money printing, paper backed with paper, a bubble that will inevitably burst. The situation is even worse than it seems, because if most Americans and the rest of the world were to become aware of this farce, confidence in your currency would be lost, the dollar would fall, and the Western civilization with it. If the next president of the United States doesn't make the necessary policies and structural changes, sooner or later that bubble will burst.
So that's it for me today, guys. I know a little bit of a shorter video. If you guys like these shorter videos, you know, obviously dropping a like does help to push it out to other people. You know, drop a comment below. Let me know what you think. What do you think? Do you believe in the diminishing returns theory? Do you think maybe we'll just get to around 90K, 100K, maybe that's it, you know, based on traditional models of how we really should be, you know, looking at less and less, or based on the fact that we've seen the amount that has been gobbled up by the institutions already and the way that this math plays out? And also, like CTO Larson had mentioned, you know, just looking at this without the ETFs involved, we could go to some of these levels. It really makes you wonder just how crazy things could get. So that's kind of why I said, you know, 250 days or less, which is, you know, roughly give or take a little bit over 8 months, we could enter into that Bitcoin chaos mode. So let me know what you guys think. Like I said, I'm skipping the charts today. I just wanted to leave it on here. I wanted to just get this out to you because I was absolutely blown away. Like, I knew that there was a lot of demand, but when I actually crunched the numbers, I was like, that's crazy. And what's even crazier to think is that we don't even have all of the institutions in just yet. I mean, you know it takes a long time, right? It's a very long process. First of all, they want to make sure that the product has been out for, you know, a good enough amount of time before they start advising it, right, to their clients. And then, you know, they're not going to dabble, you know, crazy. They're going to start with maybe just a small percentage, you know, dip their toes, maybe 1%, then maybe start ramping it up to 3%, right? But you couple that with the dollar printing, with the fact that, you know, you have depreciating, basically everything else is virtually, you know, I mean, if you're holding money in a bank, you know, why? Why? I mean, I get it. Like, you need savings and all that other stuff. But, I mean, if you're looking, like, long-term, if you don't need this money and you're not using it to pay bills, it's really not doing any service for you just sitting in a bank. And I think you guys know that. So I'm basically just going to leave it off here today. Hope you guys have a wonderful freaking weekend. You're awesome. My parents are actually down from New York today. So, you know, they're down at the beach right now. We're going to be hanging out. So, but I will try to get another video out. If I see something, make sure you guys get subscribed if you haven't. And also follow me over on Twitter, X. I've been doing a lot more posting over there than usual. I really like X, actually. It's the platform is getting a lot better now. It's a lot better than it was, you know, when Elon first took over. So, you know, a lot of cool features. Also, side note, I know I'm rambling, but it was hilarious that the European Central Bank had put out I don't have it pulled up right now, but they had put out a tweet about like how Bitcoin is like terrible or whatever, and all the fact checkers, you know, how they can do that, the readers, and they were just like, No, that's not true. You know, the dollar and the euro are used for nefarious activities, and Bitcoin is a sound decentralized protocol, and it's just hilarious now. Like the propaganda machine is slowly starting to break down. So that's it for me. I love you guys. You're awesome. If you do want to learn how to trade, you can check out Femex below. Great exchange if you guys are looking. They have a little bit of no KYC, lower withdrawal limits, but if you want to do decentralized trading, you can check out Apex, and they do still have that bonuses below. And Levex is still going to match your first $5,000 trade, so you can trade with free money. Until next time, guys, I love you, and peace out.